Your bank can freeze your account the moment your address stops looking like a real US address to them. No phone call. No warning you'll actually see in time. Just a letter mailed to a place you don't check anymore, and 30 days later, you're locked out. In 2025 alone, an estimated 340,000 bank and brokerage accounts belonging to Americans abroad were closed or restricted. Not for fraud, not for suspicious activity, for an address. Here's the part that should make you angry. Most expats think this is one strict bank being difficult. It's not. It's federal law written into the Patriot Act over 2 decades ago, and it's being enforced harder right now than at any point since it passed. Stick around until number 1, because that's the actual fix almost nobody sets up correctly, and skipping it undoes everything else on this list. We pulled this directly from FinCEN's Customer Identification Program rules, the IRS's current FATCA and FBAR thresholds, and 2025 to 2026 account closure data from expat banking trackers. Quick disclaimer before we go further. This is general information, not personalized legal or tax advice. Your situation has specifics a real cross-border advisor needs to see. Use this as the map, not the final word. So here's how exposed you actually are, ranked from the riskiest setup to the one that actually holds up. Number 5. This is the retiree who moves abroad and just stops updating anything. No new address on file, mail bounces, they assume if nothing's wrong, nothing's wrong. Here's why that's backwards. Under Section 326 of the Patriot Act, the Customer Identification Program rule, every U.S. financial institution is legally required to verify and maintain a current physical residential address for every account holder. Not a foreign address necessarily, just a real one, kept current. When a bank can't verify yours, you don't get a grace period. You get flagged. The bank mails a notice to the last address on file, the same address that's already not working, then restricts the account when nobody responds. If that account happens to receive your Social Security direct deposit, your IRS refund, or your pension, that payment doesn't bounce to you, it just stops. The catch is brutal in its simplicity. You won't know it happened until you try to use a card on the other side of the planet and it declines at the grocery store. Unfreezing it from overseas on a foreign phone number through a call center that doesn't recognize your situation can take weeks. Verdict. Nobody chooses to be here on purpose. It happens by accident, which is exactly why it's number 5 and not number 1. But if doing nothing is the trap, the next move people make to avoid it creates a different one. This is the expat who signs up for a mail forwarding service, gets a U.S. street address with a suite number, and plugs it into every bank as their permanent residence. For years, this worked fine. It's getting riskier by the month. Banks have started running address verification software that cross-references known commercial mailbox and forwarding addresses against a database, and flags accounts automatically the moment one shows up. O boxes and mail forwarding addresses from counting as a valid residential address for verification. A suite number that resolves to a known mailbox company isn't a workaround anymore. It's a red flag with a return address attached. The honest math here, if your entire banking relationship rests on one address that a compliance algorithm can identify in seconds, you're not hiding anything. You're just waiting for the review. The catch? Once flagged, you're treated the same as someone with no address at all. Restriction first, explanation later. And closing one account in this position often triggers a review of every other account you hold at sister institutions under the same parent bank. Verdict: better than ignoring it, worse than people think. Fine as a mail solution, dangerous as your only proof of address. This is the retiree using a son's, daughter's, or old friend's home address as their bank's address of record. Compliance-wise, this one actually clears the bar. It's a real residential address, and banks generally accept it. The surprise is where the damage actually shows up. State taxes, not the bank. If your accounts report interest, dividends, or a brokerage statement to an address in, say, North Carolina, and you haven't filed a North Carolina return in 3 years, that state's Department of Revenue eventually asks why. You can end up defending residency you don't have, in a state you don't live in, to a tax authority that doesn't know you left. The catch? It's legal with the bank and a slow-burning problem with the state. And it puts real strain on the relationship you borrowed, especially if mail starts arriving that looks official. Verdict: workable, short-term, risky if you never plan on going back to that state. This is the move almost nobody considers, because everyone assumes telling your bank you live abroad is the fastest way to lose the account. With the right institution, it's the opposite. A small number of U.S. banks are built specifically for this. Charles Schwab's high-yield investor checking account charges 0 foreign transaction fees, rebates every ATM fee worldwide, has no monthly fee, no minimum balance, and still issues a real U.S. routing number, meaning Social Security, pensions, and IRS refunds land normally. HSBC Expat offers multi-currency accounts with onboarding done entirely through video verification, no U.S. trip required. The exact numbers that matter here. Under FBAR rules, any combined foreign account balance over $10,000 at any point in the year must be reported on FinCEN Form 114. Under FATCA's Form 8938, a single filer living abroad reports once foreign assets pass $200,000 at year-end or $300,000 at any point, double that for married couples filing jointly. Miss it. And penalties start at $10,000 and climb to $50,000 for continued non-compliance. The catch: these accounts aren't available to residents of every country, particularly sanctioned or high-risk jurisdictions, and you're still fully on the hook for FBAR and FATCA reporting every single year regardless of which bank you choose. Good banking doesn't erase your filing obligations, it just stops you from getting frozen out over paperwork the bank, not the IRS, controls. Verdict: this is where most retirees abroad should land. Full stop. This is the setup used by full-time RVers, digital nomads, and the more sophisticated expat retirees, and almost no one explains it clearly. Instead of relying on a mailbox or a borrowed couch, you establish actual legal domicile in a state with no state income tax and expat-friendly residency rules. Florida, Texas, and South Dakota are the 3 used most often. That means a real driver's license, voter registration, and a domicile service address that's licensed specifically to serve as your legal home base, not just a mail drop. Paired with one of the FATCA-compliant, Expat-Ready banks from number 2, this combination satisfies the Patriot Act's address verification rule with an address that's actually defensible, avoids the borrowed address state tax trap, and gives you 0 state income tax on Social Security, pensions, or IRA withdrawals while you're gone. There's also a quieter shift working in your favor. The IRS recently clarified that a missing taxpayer ID number alone should not automatically force a foreign institution to close an American's account. Banks are now expected to weigh the full picture before cutting someone off. Enforcement is tightening on the address side, it's loosening, slightly, on the documentation side. The catch? None of this is free or instant. A domicile service charges an ongoing fee, the paperwork takes real effort to set up correctly the first time, and it does not reduce your actual U.S. tax bill. The United States taxes citizens on worldwide income no matter where you live. This fixes your banking access and your state tax exposure, not your federal return. Verdict. This is the version built for someone planning to stay abroad for years, not just a season. It's more set up front. It's the only one on this list that doesn't have an expiration date. So here's where that leaves you. Doing nothing gets your accounts frozen without warning. A virtual mailbox alone is a flag waiting to be read. A borrowed address solves the bank problem and creates a state tax one. The right bank with your honest foreign address handles most retirees just fine, as long as you actually file the FBAR and FATCA paperwork on time. And legal domicile paired with the right bank is the only setup that closes every loophole at once. None of this is about hiding from anyone. It's about making sure the one number you depend on every month, your Social Security deposit, your pension, your retirement savings, never sits frozen in an account you can't reach from 8 time zones away. We've already broken down exactly which banks are still taking new American clients abroad in 2026, and which ones quietly stopped. That's linked right above. Because surviving this law was never really about the islands, the visas, or the cost of living. It's about the paperwork most retirees never see coming until it's already a problem.